Hi, Tony Bradshaw with AddSomeToYourIncome.com here to talk about how the stimulus money that's coming to us is to be regarded in a different way than as income. First, I will talk about what the stimulus money is not, where it's not coming from. Then we explain where it does come from and how it affects us. I will end with giving my advice on what to do with that stimulus money if you're not thinking of it as income, which is kind of my underlying plan to convince you that it is not income. I'll need to define that a little bit. First of all, I wear my money tie today because today was that final vote. This is March 9th, and it was voted to send out this stimulus package. That's the date that I'm making the recording. I may try and figure out when you'd actually see that money to then post this around that date, because we'll need to do post-production work. Enough about the behind the scenes and why I'm wearing a tie that I'm wearing, which, by the way, my parents gave to me. I like this one. Students like it too. They're like, hey, money, can you just magically make that real money and give it to me? Kids are so creative. All right, so where is this money coming from that the government is doing? And it's not coming from your 401ks. It's not coming from your taxes. It's not coming from Social Security. Those things are there, those things are set up. A lot of people would first think, well, I pay money to the government, and so now they're just sending the money back to me. It's not quite how it works. You'd see it as something through the IRS, like a tax rebate or changes in the tax law that would see your money happening that way. So that's not what this stimulus package is. And all of them that I know of, and from what I understand that have come out, it's not been from taxes. It's not Social Security. It's not from those places. So where does it come from? Let me say the second thing that came to my mind as an economist and with my degree in economics. Well, okay, then the government must be printing more money, and that's called seigniorage. So seigniorage is when the government prints up all this extra money. So they must be printing up money like my tie got printed. And they print that extra money, and so then my money is valued at less. Kind of. It has been decades since the government has done a lot of printing of money in order to function because of the way our world economy works. Our dollars are inside of a global economy, and printing more dollars actually decreases our buying power in the world economy. And so it has been a long time since the federal government has chosen, not the federal government, the Fed, which is the Federal Reserves, the Treasury, basically, because we have our 12 districts and we have those that meet on that board. It's been a long time since they've made the choice to print lots of money in order to fund whatever the government needs to fund. Again, because we like to keep our dollar value against other currency kind of status quo. And this has been a great thing. It was predicted by an economist a few hundred years ago, probably late 1700s, of this kind of economy that we live in now, where our money is a currency against other currency, and it actually makes it more stable. All right, so if it's not seigniorage, it's not taxes, it's not coming from my 401k or Social Security, what happens? Well, the Federal Reserve meets and they decide to sell more bonds and treasury bonds, treasury notes. Basically what these are the government writing an IOU. I owe you money, and I'll pay that in X amount of years, and I'll give you a certain X amount of percentage on that money. So when the Treasury does this, they say, here's a Treasury bill, sometimes called a T-bill or a T-note. Here's my Treasury bill, Treasury bond. Here's the bond. I agree to pay you later at a higher interest rate. That can make our economy's interest rate change. That's the main thing that happens. So the government right now is selling bonds, and when they've increased the supply of bonds, then that means that their interest rate is going to rise. And when the interest rate rises, we end up paying that out in the future on interest on things like education loans and your mortgage and loans for cars, all these different things. Like if you want to go get a business loan, you're going to see the interest rates going up because the government is printing more bonds. This, in a way, is the government getting a loan. And then later, we end up paying it in a long route because of the interest rates going up. That's how this money works. All right, so $1,400 coming to every qualified American here in a couple of weeks, decided today. What do I do with that money? First, what you should know is why I'm saying don't regard it as stimulus money. Pardon me, as income. Regard it as stimulus money. The government is hoping that this money gets into the economy, flowing into places that money wouldn't be flowing unless you have this extra chunk of change. I got $1,400. How am I going to put that? Am I going to put that in investments? Am I going to, like stocks and bonds? Am I going to go spend money on things I wouldn't have spent on, like entertainment and vacations and trips and things like that? The government is kind of pushing the gas pedal in hopes that we get the economy going some more, which is what it is. What do I say when I'm saying it's not income? First of all, receiving money, it can, in ways, demotivate you from doing what your life calling is. If I'm sitting here and I receive this wad of cash and I think, okay, I'll just have more children, right? I'll just live off of the benefits of being here in America. When I think about what I'm hoping for my listeners and what if you follow my advice or other people's advice, if you really want to have a lot of money flowing to you, you really want to add to your income, then you want to figure out what you're going to do that's valuable that other people are going to buy from you. So in this situation, what did you give the government to get this money? What was the exchange? To be a citizen. So be really careful about thinking of this as income. Maybe the closest to the income that I would recommend thinking of it is as a gift income. An unexpected gift from Uncle Sam, right? You've got this uncle, and something happened in Uncle Sam's life and in your life, and Uncle Sam decides he's going to gift you money. Right? There's very little that you did. You were just related. It is income. Money has come into it. It's stimulus money. So what should you do with it? I would very quickly, and I plan to quickly, process it through the income account. Yes, this is money coming in. I'm not thinking to myself, I did something great. I've accomplished something. It was all my work. I did labor. I've worked to be able to earn this. No. This is, at best, gift income. Think of it as gift income, right? But don't regard it as income. Like, then you start planning on that, like just, duh, okay? Because, as I said, interest rates will be going up. Now, knowing that, just remembering that. So if Treasury bonds, if there's a decrease in the demand, then the interest rate is going to get pressure to go down, right? So in other words, when we see a higher demand, then the price goes up, and then that means that the interest rate that's on it has lower yield, and the interest rates will go down. Because there's a flood in of bonds, we're going to see the interest rates go up. So what do I recommend with this money? What do I plan on doing with this money? I plan on taking this money and putting it straight into my investment account. You can watch some of my other videos for the information about the 5 bank accounts. This money comes straight in through the income account. I don't really convince my brain that it's income, right? Gift income at best. Gift income, and I just slosh it straight over to in my investment account. And I've got to be thinking how I'm going to invest this. What am I going to invest in next? What are the things that I'm putting my money into that I'm going to see a high rate of return, knowing that down the road in the not too distant future, the interest rates will go up on things like loans. That's what I recommend that you do. Find a way to get this chunk of change into investing so that you see yourself stable later on when you're needing to have interest rates happen. I mean, actually, for me, I'll just say this, I have done either person to person or person to small business loans, often with collateral, that I base on the interest rate. So if I tuck this money aside for investment instead of just frivolous spending, which is another one of the bank accounts, if I tuck this away into investments, I have that money ready so that when either an individual or a business is in a need of a loan, the way I do that is I'll look at the interest rate, and we'll see this prime interest rate going up. I will look at the interest rate. I usually tack on 10% just because I'm like I'm an individual. It's sometimes I forget the right name right now, but I might post it in the comments below. Anyway, it's just me investing, and so I'll add on usually 10% from the prime rate, and that's the deal that I work out with people. So I'll have these funds ready to go. I can't speak English. I'll have these funds ready to go, and I will be able to use that to invest. You, of course, can do what you'd like. This is just how I recommend you handle the stimulus money and think about it, if at all, as income, as gift income. I look forward to seeing you on the other side.